Bailey, can you talk? So Wintrust launched their ventures group not too long ago. And why did you guys decide to get into it? And talk a little bit about how working with a bank would be different than working with a venture capital firm.
Yeah, so our heart and soul is banking. It always has been. We started as Lake Forest Bank and Trust. We were a startup. We were a storefront in Lake Forest that Ed Weimer founded. A few years ago, some regulations came out which left us with quite a bit of money, about $30 million, and no real allocation or use for it. Our founder and CEO, Ed Weimer, started to see some stuff that he liked and he thought was cool and invested in it, one of which is a company that won a Chicago Innovation Award. Called me 9 months later and said, hey, make sure that those companies are still around. That very quickly became, hey, we should probably have an investment policy. And also, if we're going to invest in these companies, we're a bank, we should figure out how to lend to them too. So in January, we came out publicly and said, Wintrust Ventures is born. We are going to lend to venture-backed companies. We are going to look to invest in seed and Series A companies. Since then, it's been high octane. We closed our 6th portfolio deal a couple weeks ago and continue to look at a lot of debt. And I think we'll probably close out with like 10 or 12 portfolio companies this year. So we're going fast.
Can just on venture debt, just because not everybody might totally understand that concept, can you talk a little bit about why and when?
So typical loans, you're going to look at cash flow and you're going to look at assets. That's how typical commercial bankers lend. When you're looking at venture, the companies typically don't have assets and they certainly don't have cash flow. So what you do is you look at the Rishi Shaws of the world, the Math Venture Partners of the world. Hey, these guys have written big checks to this company. They're not going to let this business die over $1 million or $2 million line of credit. And that's how you underwrite, is the strength to the cap table versus assets and cash flow and EBITDA. So that's the biggest difference.
Awesome. Thank you.